So market's cleaning itself up. We got Fed coming up here. I actually like the idea. I don't know whether it makes sense or not, but I actually like the idea that probably over the end of the year period, probably even right through here, probably see some sort of saucer bottom here. I also like the idea that we're probably going to have some sort of counter trend rally in the US dollar index through that winter period. And as we had sort of said earlier, Chris's girlfriend, Miss Booth, has been suggesting there is some sort of crisis coming down the pike. It might just be something as simple as this, though. Considering we are now technically about what this crisis is actually a few years late, eh? Like, I would actually make the argument in our education program, the whole thing. I believed, according to my cycles, that this was actually the end of the fear cycle and the beginning of the greed cycle. So interesting that the US dollar index is moving up. At some point, we'll actually get to the point where the US dollar index moving up is considered a good thing in the marketplace, but that probably won't happen for probably a good 5-10 years. Right now, we're still trapped in the commodities market bull kind of cycle thesis kind of thing. So anyway, just in the short term, I could very easily see that, kind of like what I did here, we just do an exact opposite of this, but probably not that high. It's probably a little bit too much. Maybe like that. Tough to say whether we pivot off of that low, but I do like, and probably not that big of a rally, something along those lines. I do like that kind of thinking in through sort of the first part of 23, which is going to imply, kind of stock market weakness, risk asset weakness. I don't know whether it's on economic malaise. I'll tell you, the Fed has raised interest rates dramatically. You might argue that, our interest rate picture, it looks to me like the Fed has gotten in front of this thing. Whether it be mortgage rates down in the States, looks like they've topped. 10-year U.S. Treasury yields, it looks like they've topped. And, this is a primary tool that we use in the Level 1 program. And it's what I've used for years and years and years, and I think it's extremely helpful, is our inflation-deflation relationship. It's actually flashing deflation here, not inflation right now. The Fed's really has its hands tied by the euro-dollar market, which is short-term interest rates down in the States. Fed spread now sitting at 0.43, so very comfortable. No worry about crisis. It'll be interesting to see what happens as of Wednesday. Does this come right down, or does this just sort of sit here right now, sitting the January Fed funds contract now sitting at basically, what is that, 4.35%, something like that. Is that pricing in that latest increase? I think Fed funds right now is spot market is like 3.75%, 4%, somewhere in there. Yeah, okay. So we're sitting at 4. Market's looking for 4.5. Right, that's basically 4.5 right there. I guess 4.5 would be 95.5, right? So that could come down a little bit further, but you can see euro-dollar market has actually been moving up smartly, coming off of its panic low. Really good lesson in M's and W's, everybody. Is there something that you can always be learning in the market? Wow, is that ever a good-looking W down in there? And sure, the proof of the pudding's in the eating. It's kind of like, should I listen to this Beamish guy talk about these W's? The reason why you want to pay attention to this and why we teach this is because look what happened following. Obviously, that W was legit. There was something significant there. So, and also too, if you can get to this point, then rock on. But hopefully what you can see is there's a little W right in the right-hand side of this bigger W. And that is like the trader's trade right there.